WeedMaps can't find a break. The company's been on a steady decline since it went public in 2021.
And now, time introducing
WM Technologies Incorporated on the NASDAQ. Operator of the multi-purpose WeedMaps cannabis platform was up 28% Wednesday morning after news broke that its founders were considering taking the company private. Doug Francis, Justin Hartfeld mailed a letter to shareholders on Tuesday outlining the proposal, which was acquired by MJ Biz Daily. They want to buy up all the shares at $1.70 apiece. This number represents a 39% premium on the stock's closing price yesterday. Our proposal presents the company's public stockholders with a valuable maximizing alternative to WeedMaps' current strategic trajectory and an opportunity to de-risk their investment, Francis and Hartfeld stated in the letter. WM Technologies has been on a steady decline since its IPO in mid-2021. As pointed out by researchers, the WeedMaps platform's parent company has lost about $2.3 billion in enterprise value since 2021. Jeez, dawg.
Well, this stinks.
And Justin, this proposition by the two founders still requires approval from the board of directors and shareholders. The aim is to have the delist completely within the next month. WeedMaps was launched in 2008 to provide a platform for patients with medical cannabis subscriptions to find dispensaries and doctors. Its scope expanded into the following years as certain American states legalized adult use bud and eventually Canada. WeedMaps has a considerable presence in Spain too, where it serves as a listing catalog for local weed consumption clubs. Some refer to WeedMaps as the Yelp for cannabis. It functions as a hub for product and service reviews, cannabis dispensary listings, educational marijuana content, and cannabis culture. The proposal represents a 39% premium on Tuesday's market close, a 52% premium on implied enterprise value as of Tuesday, and a 65% premium to the volume-weighted average price in the past year. We firmly believe that our proposed transaction is the best interest of WeedMaps stockholders as well as all WeedMaps stakeholders, including its employees, clients, and end users. Also, WeedMaps faces significant headwinds. When WeedMaps went public in June 2021, after a merger with special purpose acquisition company SPAC, Silver Spike Acquisition Corp., there was an expectation the advertising platform and consumer marketplace would capitalize on growth opportunities with the backing of institutional investors and a NASDAQ listing. Today, however, WeedMaps is facing significant headwinds with licensed end markets continuing to decline from the peak volumes achieved at the time of the company's transaction in 2021. Further, the continued consolidation of cannabis retailers and brands among multi-state operators, coupled with the increased entry of traditional technology providers into cannabis, are creating significant risk for WeedMaps' current business model as a public company and enterprise value since going public. To finance the deal, Francis and Hartfeld plan to roll their equity interest into the company, roughly 32% of common shares outstanding, as they attract proposals for debt and equity financing. They hired investment banking firm Jefferies as financial advisor and Cadwalader, Wickersham, and Taft as legal counsel to handle the transaction. Both are headquartered in New York. WeedMaps SEC trouble. In September, the U.S. Securities and Exchange Commission fined WeedMaps Technology $1.5 million for allegedly misstating user metrics leading to its 2021 sales and ensuing listing on the NASDAQ. In the consent order, the SEC accused the company of repeatedly citing an untrue and misleading data on monthly active users in regulatory filings, earnings reports, marketing material, and investor decks for more than a year. Yikes. But to be honest, that's kind of the way things go. You can get away with things for a little bit, but yeah, when it comes on you, it rains, it pours. Somebody told me in life you get away with 90% of things, but it's that 10% that's going to kill you. And that seems like kind of what's happening with WeedMaps. Just from my experience, businesses don't really get ahead without doing some kind of underhanded deal or taking advantage of some loophole or a law that's not necessarily in place and basically towing the lines. Seems like the founders are trying to get out before anything bad really happens, but that's yet to be determined. The bad part about all these companies is they don't understand you need a thriving economy, meaning most people plan when things are at optimum levels, 100%. And they never think about having to deal with things in an 80%, 70%, even a 50% rate. When all things are going well, it's easy to hide mistakes. But when the money's not flowing in hand over fist and you really have to account for everything, that's when you see these businesses fold. When investor money is gone, yeah, usually the company's not far behind. Let me know what you think in the comments below. It's been Brutal Monkey News. Thanks for watching.
And now.